Hey, it's Paul with a stock market update. On Sunday, I was reading about what is going on, and I saw the news that IBM, which is a very large company and which is in the Dow Jones Industrial Average, it's in the S&P 500, I was going to buy a much smaller company called Red Hat. And with that, I really sensed that the markets were really going to start to bottom out, and now you could really start to see the beginnings of a sustainable rally. And here's why I believe that. Because IBM is such a big part of the Dow, you could have seen that the Dow now really had a chance to bottom out. And the reason I say that is because IBM has been a company that's been in decline. It's been unable to be able to lift its sales for a long time. And buying this very fast growing company called Red Hat, which is involved in Linux software in the cloud, is the real first big positive move that's been made by IBM in a very, very long time. It shows an active interest in sort of looking to invest in the future. And IBM is paying a lot of money to buy this company called Red Hat, $34 billion. So it's a big deal for IBM. However, when you now step forward and think through the implications of IBM doing this, when one company does something, it's usually a sign that other companies have been thinking of doing the same thing. And in fact, if you look at news reports, it suggests that other companies like Cisco might have been interested in buying Red Hat, and which is why the premium that IBM is paying for Red Hat is so high. And if that's right, it means that other companies are looking at other cloud companies and other companies that serve this market to buy into. And in truth, there really aren't a lot of these companies. There are something like 15 or 20 companies. And if so, if these very large companies like Amazon, Microsoft, Cisco, Oracle, if they all came to buy these companies up, they'd be able to gobble them up very, very quickly. And here's why that's important for the overall market, because that whole idea is now going to make buyers in the stock market come and think, if Red Hat is worth 34 billion, what's this other company worth? And what's this other company worth? And I wonder how much they would get if they were acquired. And what impact would that have on the acquiring company itself? Because I can tell you that in the past, I've actually recommended IBM to my Profits Unlimited readers, and we sold out of it because you could see that their strategy of simply waiting for their growth businesses to eventually outrun their businesses that in decline was a failed strategy. They were unable to lift their sales, and all they were largely doing was sort of managing their decline. However, this is a very large proactive step. And some of these other companies that I mentioned, these very large tech companies, which today are really very mature, sort of stable growth companies, if they are all going to take on the action that IBM does, well, it also boosts their own growth rate, and that's good for an index like the NASDAQ index. So it's going to bring buyers into the stocks, which in turn is going to bring buyers into the NASDAQ index, which will bring generally buyers into the S&P 500 and the Dow. And now you can see how there is the formation for a base and a bottom to form, because ultimately the stock market is driven at a very simple level by buyers and sellers. If no one wants to buy, the stock market is unable to go up. And if everyone wants to sell, well, then the stock market can only really go down. It is the action of buying that drives prices up, and is the action of selling that drives prices down. So this move by IBM in many ways is going to be transmitted through the market as a result of the connections between the big indices, which is the Dow Jones Industrial Average, the S&P 500, and then the NASDAQ indices. And the fact that many people even put on strategies to make sure that these big indices never move on their own. In other words, they're all expected to move together. So if one index moves, it's also going to carry the other indices forward. So for all of these reasons, I'm going to say that I still believe that the market is going to bottom out in a process. I mentioned in my last update that usually bottoms are a curved process. So it's, while it looks like a single point on a chart, however, that's really a false reflection of how bottoms are formed. Bottoms are usually formed by people buying along a curve. And then once sort of people buy those prices are no longer available, and now the prices get stepped up. And I believe that we're beginning to see this. So I wanted to give this market update to you since so many of you have been interested in the previous market updates, and I'll try to make more market updates. If you would like to see more of these, please give this video a thumbs up, subscribe to this channel, and share this with your friends and family. Until then, this is Paul Mampilly.